As we're through the first trading month of the year, what's the best way for you to analyze January's trades? And we'll go to the charts to determine the market environment in the Micro E-Mini Nasdaq and E-Mini Nasdaq 100 futures. Let me take you to this week's NinjaTrader Charting Edge. Now, before we get to the charts, I want to talk about two products that move in tandem. They're pretty much the same product on the charts, but they are different in their contract size. And that's the Micro E-Mini Nasdaq 100 futures, symbol MNQ, and the E-Mini Nasdaq 100 futures, symbol NQ. Now, the E-Mini Nasdaq 100 futures are $5 per tick, $20 per point, 4 ticks per point, and around $15,000 margins. Check with your broker to confirm what the margins are because they could change. Now, the Micro E-Mini Nasdaq 100 futures symbol MNQ is 1/10 the size of the E-Mini Nasdaq 100. 50 cents per tick, $2 per point, 4 ticks per point, and they are $1,500 margins. As you can see, they are just 1/10 the size of the E-Mini Nasdaq. So when you're looking at your trade setups, a lot of times I'll talk about this using the E-Mini Nasdaq as my primary chart, but a lot of times I'll go to the Micro E-Mini Nasdaq because my stop is really wide and I want to be less price sensitive. Actually, let me take you to the charts and show you an example of how I would choose the micros versus the E-Minis. So here we are at the Micro E-Mini Nasdaq 100 futures, symbol MNQ, daily chart. Same old with the indicators, 20 period, 3 standard deviation Bollinger Bands. Red is the 10-day simple moving average. The gold moving average is the 20-day simple moving average. Now take a quick look at this chart because now we're going to go to the E-Mini Nasdaq 100 futures chart and I'm going to show you some examples from there going over whether or not I choose micros or the E-Mini Nasdaq. So as you can see here on the E-Mini Nasdaq 100 futures chart, symbol NQ, chart is identical. They move in tandem, okay? The only differences are what I went over at the beginning. The micros are 1/10 the size. So now, as a trader, when would you decide to use one over the other? For me, it's pretty simple, especially for the E-Mini Nasdaq versus the Micro E-Mini Nasdaq, because the E-Mini Nasdaq moves so much. For me, it comes down to I better be intraday and really close to my stop for me to use the E-Mini Nasdaq. Otherwise, I use the micros. What do I mean? So the other day, if you follow me on social media, I talked about how I started to get long the E-Mini Nasdaq and the Micro E-Mini Nasdaq futures for a trade setup that I had on the daily. Pretty much almost out of that position at this point as I'm recording right now. But I'm going to show you what triggered it and how I chose the difference between the Nasdaq and the Micro E-Mini Nasdaq. Now, Bollinger Bands came in. You guys know I talk about this all the time. Once that mouth goes from being open to closes and we get above the 10-day moving average, which we did here, we got that daily close. To me, that triggered a test of my 50% line, which is 50% between the top Bollinger Band and the bottom Bollinger Band. That comes in right around 15,350. Now, this daily close here was right around 14,850 to 900 areas, right around where it closed. And I said any sort of pullbacks into the prior day's range, which was into this bar right here, I said look for some longs leaning on the 10-day moving average, because to me, that's an area that I think should hold, especially since we got that daily close above it. Any back tests to it, to me, as long as we hold above it, I want to keep buying it. And my hard stop would have been below that day's low. So as you can see, a pretty wide stop. So for me, when I started to get pullbacks into that bar, I was using the micros. Why? Because my stop is so far wide. I can still get as big as I want because I can keep trading a lot of micros to get as big as one full E-Mini Nasdaq, which would be 10 of them, but I'm not as price sensitive. So I have the ability to scale in, especially in a position like this where the market's super volatile and I'm a ways away from my stop. That to me tells me go to the micros. You're too far away. Don't be price sensitive. You want to participate? Start getting in using the micros. Now, we never got a chance for me to get in using the E-Mini Nasdaq 100 futures because we didn't get close enough to my stop. This was a swing position. If we would have come down intraday near the 10-day moving average and we would have started to hold there, then I would have went to the E-Mini Nasdaq futures because now we're closer to my risk price. I could trade a little bit bigger. I could trade a little bit more aggressive. I don't have to be as price sensitive because I know if this area holds or doesn't hold, I'm out. So then I'll go to the bigger contract. And plus, it's intraday. I'm not looking to keep it overnight. This is now a day trade. So for me, I don't have to lose sleep knowing I have on the bigger E-Mini Nasdaq 100 futures. So for me, it really comes down to the simplicity of how far away is my risk price? Because a lot of times we as traders, we'll get a trade set up and you're looking at it saying, man, that stop is wide. That's probably a lot of risk for me to take on. Maybe I can't afford it with the E-Mini Nasdaq. That's when you go to the Micro E-Mini Nasdaq and allows you to be less price sensitive and gives you the flexibility of scaling in and scaling out. And to follow up on that a little bit, I put this tweet out the other night. I said, for those that think they can trade without emotion, just put on some NASDAQ and tell me that doesn't trigger any emotions. And to me, I was making a bit of a joke here because somebody was saying that they are trading without emotion. I don't think that's possible. Not going to get into that into today's show. But in order to reduce emotions, because emotions are a part of our trading, I firmly believe that, you want to be able to trade smaller. That's why you go to the Micro E-Mini Nasdaq futures. This way you're not as price sensitive. I keep saying that, but that's super important because you want to be able to execute the trade for what the trade is. You don't want to be in too big to where emotions overwhelm you and you are not executing it as well. I also put this tweet out the other day, which got a ton of engagement. I highly recommend you go and check it out on my stream at Anthony Crudele on Twitter. What is your favorite indicator to determine the market environment? Mine is Bollinger Bands. I talk about them each and every week. And it was really awesome to see how many people put in their favorite indicator to determine the market environment. Over 200 replies. It just goes to show you no two traders are the same. And how you go about your business is your business as a trader. And it just comes down to how you see the market. I love Bollinger Bands. For me, it really helps me determine what the market environment is. I'll actually do a quick example here to show you how I use the Bollinger Bands to determine the market environment. Let's go back to that E-Mini Nasdaq. Here we are back at the E-Mini Nasdaq 100 futures, symbol NQ. What do I look for on the daily every day that helps me determine market environment? As you know, if you follow me on this show or on social media, since the first day of the year, we were below the 10-day moving average when we closed below it. Second day of the year, we took out the low and the mouth of the Bollinger Band opened up and we hugged below the 10-day moving average. I was only looking at short positions in the NASDAQ. Why? Because that market environment told me when the mouth is open, we're below the 10-day moving average. And my time frame, we are in bear mode. That has now changed. The environment to me has changed. How do I know? Because the Bollinger Bands told me. Mouth of the Bollinger Bands closed. We closed back above the 10-day moving average. We are back now in what I would consider neutral to bullish mode. I think this is a time where we're probably going to see some chop. Why? Because bull mode to me would be when we're above the 10-day moving average, when the mouth is open and we're hugging above it. We're not there yet. We're not sure if this down move is done, but it's at least pausing for now. So now I'm in neutral to what I would consider semi-bullish mode and maybe even start to turn bearish again if this mouth comes in and we start to get down below the 10-day and back below the 10-day moving average. So for me, it really is that simple of just using the Bollinger Bands and a simple moving average to determine the market environment. Remember traders, Micro Ether futures are live at CME Group. I love this product. It's 1/10 the size of 1 ETH. The symbol is MET. To learn more about Micro Ether futures, go to cmegroup.com. The first month of the year is officially behind us. I think it's extremely important to go back and look at your trades from January and do a review to see how you're trading. I put this tweet out the other day. When looking back at January results, it's important to look at more than P&L. One thing I do is see how I performed versus how my strategy would have performed if it was automated. This helps me identify how I'm executing. It all comes down to execution, so knowing if it's you or your strategy is very important. I put this into play several years ago, many years ago. And I took my strategy and I said, okay, take my favorite trade setup, put it on a simulated automated environment, look at the month, see how it did. Then I take my trades and compare that to the automated environment. Why do I do that? because a lot of traders don't know if it's them that's executing poorly or if the strategy is not doing so well. So you don't know which to fix because a lot of times it's us that needs fixing, it's not the strategy. So if you can see what the strategy was doing and you can compare your results to the strategy, that to me is very important information. It lets you know whether it's you that needs fixing or the strategy. Traders, I want to hear from you. I asked everybody on Twitter what their favorite indicator was for determining market environment. Let me know by putting your favorite indicator to determine the market environment down below. Did you enjoy today's show? Give me the thumbs up. Did you not enjoy today's show? Give me the thumbs down. Either way, I want to hear from you. Please put your comments down below. Never miss an episode of Develop Your Edge. Hit that subscribe button right there. You could also DM me on Twitter at Anthony Crudele. Don't forget to check out Instagram at Anthony C. Crudele. That's a wrap for today. See you next week.